Are you confused about the real estate market? Hearing that prices are falling, but there's still bidding wars? How can that be? Well, today we're talking about a split or bifurcated market and what that means to you and how best to navigate it. We're diving into the roller coaster ride that's been the real estate market since 2020. Buckle up because it's been quite a journey. What is a bifurcated market? In the context of real estate, a bifurcated market refers to a situation where the housing market is divided into two distinct segments, each behaving differently in terms of pricing, supply and demand, and activity. While one segment may be experiencing rapid price growth and high demand, the other may be slower with more stable or even declining prices. In the dynamic landscape of Denver's real estate market, the term bifurcated market has become increasingly relevant. This phenomenon denotes a situation where the housing market is effectively split. And I'm going to use that term going forward as it's a heck of a lot easier to say. These markets are split into two distinct segments, each exhibiting unique characteristics in pricing, supply, demand, dynamics, and overall activity. One facet of this split market is characterized by a segment increasing rapid price growth and robust demand. In Denver, certain areas or property types may fall into this category. Factors contributing to this include desirable locations, limited inventory, and heightened interest from buyers. In these segments, home prices tend to appreciate at an accelerated rate, often leading to competitive bidding wars. This heightened market is segment 1, and they are experiencing price growth and high demand. This might be a bit like Castle Rock. Real estate market here in Colorado, in Castle Rock, just in the past couple of months, we've seen a monthly increase purchase price of 2%, now averaging $772,000, and a decrease in average days on market, down 6.5% to 29 days. These figures show that Castle Rock is appreciating and in high demand. On the other end of the spectrum, the second segment within the split market may exhibit a contrasting pattern. This segment may encompass areas or property types where prices are relatively stable, or in some cases where they're actually declining. Factors influencing this scenario can be oversupply, shifting buyer preferences, or economic factors regarding specific regions. So let's call this segment 2, and that's slower or declining prices. And it's crucial for home buyers and sellers in Denver to recognize the existence of this split and understand how it affects your real estate goals. One area we're noticing this is downtown Denver. Some of the appeal of living downtown may be waning, perhaps due to the homeless issue. So that market is starting to see less demand and longer days on market. So what does all of this mean to you as a homeowner or as a home buyer? Well, listen up. This is very important because depending on your position as a buyer or a seller or your preferred location within Denver, the strategy to navigate this market may differ significantly. By the way, I'm Cher Revelinsky, a realtor here in Denver. I can be a bit of a nerd regarding all this stuff because I love this role. And if you can't tell, I love data and educating my clients in order to help them make sense of all the noise of real estate news. This translates into helping you succeed whether you're a home buyer or a home seller. Back to the home price roller coaster. How did we get here? Back in 2020, something extraordinary started happening. Home prices across the country began to rise, and they were rising faster than they did during the housing bubble of 2005 to 2007. It's like we were on a wild roller coaster. But why? Well, one major reason, obviously, was the record low interest rates that made mortgages more affordable to everyone. But here's the twist. The home price jump wasn't the same everywhere. In some places like Raleigh, Las Vegas, and Austin, home values spiked by over 30%. While in other areas like parts of New York and the Midwest, prices rose modestly, maybe didn't rise much at all. So it's really different across these different sections. So let's talk about the Great Migration. Here's where things get even more interesting. The accelerated price growth in certain markets had a lot to do with a sudden increase of demand. People were buying new homes during COVID-19 for various reasons, changing needs, locking in ultra-low interest rates, and relocating. With remote work becoming the norm, many folks decided to say goodbye to expensive urban areas and move to affordable cities. Others moved to be closer to family or to explore new job opportunities. I saw this a lot. This migration caused a massive shift in demand and prices, especially in places previously considered affordable. It's like everybody wanted to ride the same roller coaster. So fast forward to 2022 and the economy was moving at lightning speed. Inflation skyrocketed to a 40-year high of over 9%. To combat this, the Fed decided to increase interest rates, which in turn caused mortgage rates to rise. From a low of 2.65 in January 2021, they shot up over 7%. Hold on to your hats because this roller coaster just took a steep climb. Now here's the twist you might not expect. High rates and high prices should logically reduce demand and cause home prices to fall, right? Well, it's not that simple. You see, it's not just about demand. Supply plays a crucial role too. While demand dropped, many markets saw a reduction in available inventory. Homeowners with those sweet 2 to 3% mortgage rates didn't want to sell their homes, and this balanced the equation. In some regions, the pullback in demand matched the reduction in supply, allowing prices to stabilize or even continue to grow. Meanwhile, in other areas, prices fell and demand dropped while supply remained the same. It's like a high-stakes showdown. So where are we now? Some call it a correction of the outrageous price jumps caused by COVID-19. Most of the price drops are happening in markets where prices saw the extreme growth from 2020 to 2022. On the flip side, markets that were more stable during the pandemic seem to be more stable now, showing steady prices and modest growth. So, what's happening here in Denver? We've started seeing prices rise again, although not as fast as they were during the pandemic, but still steadily. Now, the big question is, what does all of this roller coaster action mean for you? Well, if you're navigating the real estate market, especially here in the Denver area, you need an experienced realtor who knows the twists and turns of the neighborhood. And hint, that's me. I can provide you with invaluable guidance tailored to the unique characteristics of each market segment. So whether you're selling or buying a home, I can help you make informed decisions that align with your real estate objectives. It's like having a seasoned roller coaster expert by your side and a smart seatbelt. Staying updated with the latest trends in Denver's split market is crucial. If you haven't already, subscribe to our weekly newsletter. Each week, I offer the best possible guidance to ensure you navigate this complex and real estate market with confidence. So let's enjoy this roller coaster together. That's a wrap for today. And I've walked you through what has been happening with our real estate market and what is currently happening. If you found this video informative and entertaining, give it a thumbs up. And don't forget to subscribe for more real estate insights. I'm Cher Revelinsky, eXp Realty. Talk to you